If you clicked on this video, it means that you need funding for your business. There are several ways you can explore to get loans for your business. Here are 7 options for you to consider with examples. Now keep in mind, these are just examples and not actual financial advice. Make sure to always do your own due diligence. Your first option is going through a traditional bank. You can always try to get a loan from a bank. However, if you're a first-time entrepreneur and if you have no collateral, it's not easy. If you have significant amount in assets, they might consider giving you a loan, but don't be surprised if you get declined because banks don't like risking their money with first-time entrepreneurs. Bank loans may come with competitive interest rates and various repayment terms. It's always good to start with a bank you already do business with because you already have a relationship built with them. Now, in order for you to obtain a business loan from a bank, they will ask you for a business plan. I created one just for you that you can download in the description box below. While you're downloading your free business plan, make sure to subscribe for more videos on business. Your second option is credit unions. Credit unions are very similar to banks, but are member-owned financial cooperatives. They may offer business loans with favorable terms to their members. A lot of people confuse banks with credit unions and vice versa, so let's compare both. So first, they both offer checking and savings account, credit cards, loans, and so on, and they also both have a license to hold and lend money. The banks, in short, take your money and then lend your money to others. That's how they make their money. Banks are also typically owned by investors. Credit unions, on the other hand, are not-for-profit cooperatives. They're instead owned by members. Unlike banks, a credit union's profit is returned to the members in the form of interests. Credit unions often have membership fees and requirements. They're designed for members of a specific community. For example, some credit unions are dedicated to place of worship, residents of a town, military, and so on. They also don't have as many products and services as banks do, and they're also less tech focused. They do usually have better interest rates and lower fees than banks. Your third option is online lenders. There are many online lenders and peer-to-peer lending companies that cater specifically to small businesses. They often have a really quick application process and they're more lenient when it comes to credit requirements. For example, they accept lower credit scores, they accept businesses that have been running for less than a year, and they don't always require collateral. Some examples are Cabbage, On Deck, and Funding Circle. Now keep in mind this is entirely done online. Now here comes the cons. Their APR is usually high. The APR basically measures the cost of borrowing. It includes the interest rate, points, broker fees, and other fees, sometimes even hidden fees that you will pay. There are some that go up to 99%. The loans usually start at $5,000 and can go up to $500,000. In my opinion, this is a loan for small businesses that need very little amounts. We're talking $5,000 to $10,000. Your fourth option is the Small Business Administration, also known as SBA. In the United States, the Small Business Administration offers various loan programs to assist small businesses. SBA loans typically come with attractive interest rates and longer repayment terms. In Canada, we have BDC, which is the Business Development Bank of Canada. Since SBA loans are partially guaranteed by the government, they're usually strict. They're usually more favorable to groups that do struggle with securing funding. If you're a minority or a female founder, this can be a great option for you. A fact I do want to mention is if you're buying an existing business, you can put down 10% of the loan and obtain the SBA loan as long as the business is profitable. Your fifth option is CDFI. Community Development Financial Institutions are organizations that aim to support economic development in underserved communities. They may offer loans to people that really struggle with securing funding from traditional banks. Your final option is Invoice Factoring. This is a type of loan for businesses that are already up and running and that really rely on invoices from clients. As you may or may not know, some clients can take up to 3 months to pay their suppliers. This can really affect your operations and your cash flow. So there are companies that provide invoice factoring services. Basically, they buy your invoices out. You will be paid by the companies. However, in exchange, they do keep a percentage of the invoice. They usually pay between 70 and 90% of the invoice amount. If your credit score is high, you can get between 90 and 95%. Now, this is not suitable for small invoices. It's usually for large ones. Basically, as long as the service fee makes sense. This can also be a backup option when times are tough. I will also link below a page on my website where you can get actual companies that do lending, business funding, and so on. It's going to be in the description box below. Now, if you're thinking some of these requirements are impossible for you and you're considering taking out a personal loan, don't do that until you watch this video till the end. If you're taking out a personal loan, you cannot write off the interest unlike a business loan, so you will be missing out on business deductions. The second thing is a personal loan reports to your personal personal credit. If you don't pay the loan down quickly, it can seriously damage your credit score. Credit scores are also not easy to be built back up, so seriously consider this before doing it. Number 3, if you're planning to buy a house or a car, this can make it really tough having a loan on your report. Consider these 3 things before taking out a personal loan for your business. Going down this route simply depends on if you're willing to take the risk or not. If you think you can manage to pay back the money in time, then you have no problems. Also, don't forget that you can always talk to a financial advisor free of charge before taking any decisions. I hope this video was helpful to you. If it was, please make sure to give this a thumbs up, and I'll see you in my next business related video. Bye!